Hello everyone, good evening and assalamu alaikum. This is Junaid Khalid in front of you, your course facilitator for financial accounting and financial reporting paper. Okay, let's start with the today's video. And today's video is very important and it's very technical. And at times we calculate the depreciation for non-current asset, that is a property, plant and equipment under IAS 16. And the most famous and the popular formula to calculate the depreciation is annual depreciation is equal to cost minus scrap value divided by estimated useful life in years. Yes, uh, obviously many of the students and the practitioners and in your practical life, in your educational life, you must have calculated that depreciation quite couple of times. But have you thought about this one? Have you ever thought about this one, that why we are deducting the scrap value while calculating the depreciation? If not, so this video is for you. Okay, first of all, in order to answer that why the scrap value is being deducted while calculating the depreciation, we need to first of all understand that what is scrap value first of all, and then we will understand that what is depreciation. Okay, first of all, if we just discuss about the scrap value, so yes, scrap value is basically an expected amount. It's an expected amount to be received after its useful life. Let me give you an example. For example, if I bought a property, plant and equipment, let's say a machine or an equipment, and the life of this asset is 5 years, it means that after the useful life, that is after 5 years of being used, that machine or the property or the equipment, what is going to be the scrap value? It's an expected amount to be received. It means that what amount we will recover after its useful life, this is known as what the scrap value. For instance, if I state the scrap value as $100,000 and the life of that asset is 5 years, which means after using that asset for a period of 5 years, I will receive 100,000. It's an expected amount. Obviously, it's not an actual value. It's an expected amount or the estimated amount that I will recover after its useful life. Now, coming back to the another concept, that is depreciation. Okay, most of the time, many of the instructors and the tutors use the definition of depreciation like reduction in the value of non-current asset. It's a decline in the value of non-current assets, physical wear and tear of a non-current asset. Okay, it's fine, but for a layman definition, it's completely fine. But technically speaking, as per International Financial Reporting Standard, IES 16, it's not the case. Depreciation is basically an allocation of cost over its useful life. Yes, depreciation is basically an allocation of cost over its useful life. That is known as what the depreciation. That is known as what the depreciation. Why? Because we all know that if you have bought an asset, so we can take the benefit from that asset in either of the two ways, either by using the asset or by selling the asset. For example, if I've bought an asset for, let's say, $600,000, it means if I have bought that asset, I will take the benefit of it. Why? Because the definition of an asset is quite simple, and it's quite simple and it's quite straightforward, that what are assets that are controlled by the entity and future benefit is expected. It means you will be taking the benefit from that particular asset. Okay, so it means if I bought an asset for property, plant and equipment for $600,000, so I will get the benefit of $600,000. Now, we all know that the benefit can be abstracted. Benefit can be extracted in two of the either ways, either by using it, and according to my estimation, the management estimation, for example, will use the asset for the period of 5 years. So it means by using that asset, we'll take the benefit of it. And there is another possibility that by selling the asset, we can definitely take some amount, we can take some value from that asset. It means now the benefit from that asset can be retained or obtained by either of the two ways, either by using the asset and finally by selling the asset. So after selling or while selling the asset, the amount that you will recover, not you are recovering right now, that you will recover is known as what the scrap value, to which we also call at salvage value or the residual value. So it means by selling the asset, the scrap value that we could recover, for example, we could recover a salvage value or the scrap value of $100,000. Now, what is depreciation? Depreciation is basically an allocation of cost over its useful life. It means allocation of cost. It means the benefit you will get by using the asset what you are doing, you are basically dividing, you are allocating that cost over the period of its useful life. For instance, if I've bought an asset for $1 million and I'll be using that asset over the period of 10 years, so IAS 16 states that let's allocate the cost over its useful life, that is 1 million divided by 10 equals to 100,000 per year, on the basis of accrual concept and the matching principle that the benefits and the expenses should match in a particular year. So in order to comply with the accrual and the matching principle, what we do normally, we allocate the cost over its useful life. So that is known as what the depreciation. Now the question arises that if we bought an asset for $600,000 and we know that we will get the benefit out of it by selling the asset. Yes, you can see that one. You can see that illustration that you purchased an asset for $600,000, and you know that after using it 5 years, you will sell that asset for $100,000. That is known as what the scrap value. So it means that 600,000 is the cost, and out of which 100,000 benefit will be gathered while selling the asset. So it means in aggregate, if you will see that you are getting the benefit by using that asset is 500,000. So it means the cost of 500,000 should be allocated over the period of 5 years. So that's why we are deducting the scrap value while calculating the depreciation. That's, I have given you the example that 600,000 is the cost, and we all know that 100,000 will be recovered while selling the asset. So it means this 100,000 should not be allocated. Why? Because we will be using the 500,000, and let's allocate the 500,000 over the period of 5 years. Therefore, we are deducting the scrap value while calculating the depreciation, because we will not avail the benefit while using it. Yes, we'll take the benefit while selling it. So that's why we deduct the scrap value or the residual value or the salvage value while calculating the depreciation. So that was the concept, that why the scrap value is being deducted while calculating the depreciation. So I hope that you will like this video, and please share this video. And if you would like some of the concept that you would like to answer, so you can definitely mention me, and we'll definitely make a video. See you. Thank you so much.